Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the chairman of US Gold Corp, a US-focused gold and copper exploration and development company. We're going to be discussing the company itself, of course, and learning about some new updates. And we're also going to go over the macro for gold and copper. So very excited to discuss that with Mr. Luke Norman. Great to have you back on the show.
Great to be back too, Jesse, and thank you, and thanks to everyone who's going to listen in and watch today.
Absolutely. Well, let's start with a macro overview. I want to get an idea of where your head's at when it comes to the gold space and the copper space. So I'm wondering, what are the main themes and trends you're currently watching when it comes to both metals that you think more investors should be paying attention to?
Well, we're absolutely in bull territory in both metals. Gold, because, hey, we're 52 years into this science test of, Bretton Woods, of fiat currencies with no gold backing. And I think we're starting to see that transparency starting to concern people, obviously, with what's been said in the news lately about Fort Knox as well, which I'm sure we'll touch on today. Copper, where to start with copper demand. Everyone thought the copper demand was going to be the electrification of the automotive industry, but lo and behold, what is the most pressing and interesting thing in tech these days? AI. We all know AI searches requiring 10 times the computation, 10 times the energy. The copper demand is going nowhere. It's going higher. So I'm watching both these metals. I am very much enamored with both these metals. What's interesting is we've not seen a lot of spillover of investment into the equities in this space. Now, I know that's concerning people. It's not concerning me. It's not a matter of if, it's when. And when those inflows come, it's a very inelastic, very small network of companies that are out there that are going to have all this capital flow into them, including the institutions themselves. So I'm watching very closely. Obviously, I'm invested in the space, and I think we're going to see a really big bull market.
I completely agree with you. You mentioned Fort Knox there. I want to talk about that for a moment. I want to talk about two topics that have kind of been front and center when it comes to the mainstream conversation about gold. The first is the potential audit of Fort Knox. Will we ever see an honest audit? Is it feasible? Would the public even believe it if somebody released some numbers? And the second is the U.S. revaluing its gold reserves, currently sitting at $42.22 on the Fed's balance sheet. Could that be a possibility as well? What are your thoughts on both developments?
Okay, so we've been hearing out of GATA, G-A-T-A, the Gold Antitrust Association, I believe. Actually, I've probably got that completely wrong, but we've been hearing out of GATA for 20 plus years now that Fort Knox's gold has been sold, that it's no longer there. To little fanfare, to little interest. What really piqued my interest was the fact that Elon Musk, the Doge whole action, revisited it. We heard a lot. We were going to hear something in the matter of days, and we've not heard much more about it since. To me, that is, I'm really at two ends, Jesse, in terms of how I think the gold market would react. I think if I was the US and I realized that Fort Knox was empty, essentially, I would be hastened. I would not be in a rush to go and all of a sudden validate gold and want to unpin it from the $42 or $47 price announced, whatever the ludicrous number is that's used by the Federal Reserve currently, because you don't have any, assuming it is there, then I couldn't see why they wouldn't want to revalue it. It's an asset. Why would you not have the asset mark to market?
Yeah, I think that does make sense. Could there be any negatives of such a move?
Yes, lots. Well, again, especially if Fort Knox is empty. I mean, to me, the US would be more inclined to want to turn their back on gold. Can you turn your back on gold is the real question. $3,000 heading higher. We know that the Russians, we know the Chinese, the Indians, they all have been acquiring gold for a long time now. They've in their what little disclosures we actually get or can believe, it's very clear that the accumulation of gold is ongoing. And look, gold was money for 5,000 years. This pure fiat system that we're operating under currently is 50 years old. I tend to want to trust in gold more than paper.
Yeah, and 50 years is yesterday in the span of human history. It's amazing how many people out there in the general public aren't even aware that fiat currency was ever backed by gold. The establishment has done a good job making it known that fiat currency is king to your average person, unfortunately. But I think that is beginning to change because of a lot of the things you're discussing right now. Now, there is also the narrative around a BRICS gold-backed currency that seems to have died off in the media as of late. But of course, we're continuing to see the aggressive central bank buying of gold, which you alluded to. This is from an article on Reuters. It says China's gold reserves rose to 73.61 million fine troy ounces at the end of February from 73.45 million at the end of January, as the central bank kept buying the precious metal for a fourth straight month. Now, I think China, a lot of people think perhaps America doesn't have as many gold reserves as is stated. The opposite is a widely held belief with China, that they have much more than they're actually officially stating. Yeah, that is understated. What are your thoughts there on China's gold holdings, on central banks worldwide continuing to accumulate? Will this continue to be a major catalyst for this gold bull market?
I felt for some time that the US dollar is starting to lose its trust. Shall we say, the trust in the US dollar internationally. So I would say that the chances, the reality that these Federal Reserves are building large gold deposits, that there will be some expectation of someone floating a gold-backed or a parcel of metals-backed currency in the coming, 5-10 years is very highly likely. I think that it's on the cards.
Yes, and although, as you mentioned, it's on the cards, inevitable, imminent are two different things, right? And I think a 5 to 10 year time horizon, seeing that as likely, does make a lot of sense. We're far from official bear market territory when it comes to the broad market, although we are starting to see some signs that things could be breaking down, a little bit of a correction. Obviously, social media exacerbates everything. So you get a 2% drop in the S&P. Everybody's on X saying, oh my God, here it comes, right? But we are starting to see some weakness. If we do see the broad market finally roll over and fall into a crash or a more serious correction, do you think we could see that capital rotate into the mining sector? Could the mining stocks catch a more consistent bid here?
Well, let's look at history and let that answer it for us. I'll go so far back that none of us were alive to the great crash, 28, 29, 30. Gold, or I can just point to 99, 2000 with the rollover in the dot-com bubble. Or we can go to 08, 09 with the real crisis that's been since warded off with just endless printing of fiat currency. Gold follows the trend initially in the market crash or correction, just like it did in 1929. Then it separates itself, and gold price was not obviously trading back in 1929. So as proxy was homestake mining, which appreciated 600%. While the Dow Jones lost 90% of its value. Same thing happened in 2000, 2001. Gold separated its relationship with the falling marketplace, and gold equities rose several 100% through a broader market crash. And again, 08, 09. So it's, that's not my pontification. Those are just facts. When the broader market stumbles, when it falls, the gold equities do tremendously well. But initially, hey, look, ask any cowboy, riding a bull is not easy. So a bull market in gold is no different. It's trying to shake you off. So it will follow the broader markets. People, obviously head for liquidity. And through that liquidity, we'll see gold rally, the gold equities rally, and a lot of capital inflow into the gold space. So that's inevitable with any kind of market correction.
Well, as we sit here recording this right now, copper is at $4.99 a pound. We're right there on the doorstep. how do you view the current setup for copper? You touched on it in the introduction when we spoke about the broader macro. Maybe you could give a little more color on how you see the supply-demand fundamentals set up and how high you think prices could go over the next several years.
Wow. Okay. So the supply-demand setup is really bad. Like global supply of copper is getting impinged by these mines getting essentially mined out. The exploration dollars have not been around for decades. The larger copper deposits, the historically more traditional larger copper deposits, are these deep-seated porphyry systems throughout the Chilean and Peruvian Andes and onwards up into Arizona. We have the similar kind of porphyry systems there. They're very deep, very expensive to explore, and even more so to develop. These are deep systems. So supply, there's not a whole bunch of new supply coming on track right now, and demand is pent up. And I don't know if anyone's been taking this AI thing seriously from the development production side of things, but let's just look to North America, for example, where there is a lot of copper between Canada and the US, but you can't get a permit. Even companies now with trying to operate under the Trump administration and their very clear ambition to free up the bureaucracy within the permitting process with the federal agencies, it's still not that easy to just turn on production. People shied away from exploration in both these jurisdictions for years because what was the point if you weren't going to be able to permit these projects? So there is going to be a real dearth between the production side of things and the demand side of things. And it's, I won't give a forecast on an actual price, but it wouldn't shock me to see copper start to be treated more like a precious metal than it is an industrial one.
Well, let's shift to discussing how US Gold Corp fits into the picture. Last time I had you on the show was August of last year. Why don't we start with an overview of the company, because we have a lot of new subscribers since then, and what has you most excited about the progress the company's been making recently?
Well, absolutely, because what my previous statement about the impossibility of getting permits in North America, US and Canada combined, segues really well to US Gold Corp. So, which we received our full permits to mine in November of last year. So we spoke in August. I was obviously alluding to the fact that we had a few outlier permits, but we were otherwise going to get our permits in. Well, lo and behold, in November last year, we achieved that. And in under 4 years, we went from a grassroots project to a reserve calculation, a pre-feasibility study, and ultimately full permits. We're shovel ready. So that is unique. How did we achieve it? And yet no one else in North America seems to be able to do so, because we're on state ground in the state of Wyoming. So it was remarkable, really. We went through all the same arduous process that we would do with Bureau of Land Management, NEPA, all the federal agencies in terms of the level of expectation, reporting, environmental, wildlife, archaeological, air quality, water quality, everything. Like it's a very big, arduous process. But on the other side of that transaction, or of that process, is a state agency that is motivated to take us through the process, to go through the process with us, to give us real-time feedback. And ultimately, they want to see business and development in the state of Wyoming. And lo and behold, like I said, in under 4 years, we've managed to achieve what very few companies are achieving right now, and that is permits to mine. So that was, as I said, end of November last year, we received that final permit. We were rewarded with a $10 million capital raise from some of the biggest names in the industry, including Eric Sprott, who privately invested in the company off the back of that. And now here we are, very early into the first quarter, or just through the first quarter, of 2025. And we have a whole slew of kind of exciting prospects around this project now. Clearly, there's the capital raise required to go and develop and go into production, but there are some other optimizations around this project, around this plant, and just around the deposit itself, which are going to lend very nicely, I think, in terms of news development around our company and ultimately price appreciation in our stock. So a really exciting time to be an investor in US Gold Corp.
About a month ago, you announced updated pre-feasibility study results. Could you walk us through those results and what they mean for the company going forward?
Yeah, for sure. Because look, our pre-feasibility study, I know this is gibberish to a lot of people maybe that are listening in today. What is a pre-feasibility study? The pre-feasibility study ultimately is a predecessor to the bankable feasibility study, where you've got, okay, everything lined up and now you are raising the money to go into production. Well, our CEO, George B., has built some of the largest gold mines on the planet. So this pre-feasibility study is not some light document. It is, we have all our engineering in hand. We have everything we need to take this to the final step of bankable feasibility study. It's quite literally a desktop operation, which is we're undergoing right now. But ultimately, the pre-feasibility reflected just the same positive values that we saw back in 2021 when we first came with our initial pre-fees. And that is kind of a great ratio of, well, first let's look at the benchmarks. We used $2,050 gold, I believe, and $4.10 copper. And from that, we extrapolated our market cap had gone up, certainly. Our market cap, excuse me. Our CapEx had gone up, certainly. We expected that through the inflationary environment out of COVID. So that increased from 222 million to around 277 million, right within what we expected. Our all-in sustaining costs, so the cost it actually, the amount of dollars all in it costs us to produce an ounce of gold equivalents. It rose from $800 an ounce to $950 an ounce, which is still remarkably low. And ultimately, we're staring down the barrel of $3,000 gold. So I invite anyone listening, to be able to reach out to us directly through the website to the company, or go online and just check our website out. But you'd be pleasantly surprised what the economics of this project look like at $2,000 gold. And you'll be very surprised how well it looks at $3,000 gold and $5 copper. It's a big benefit to us.
Yes, and as we speak right now as well, gold just hit $3,000 on my screen. $3,000 right now, just went from $2,999. So we are in the era of $3,000 gold. I think that perhaps moving forward, that will become kind of a base for the price. I also agree with what you were saying earlier, that we are in a structural long-term bull market when it comes to the precious metals space.
And we are a very undervalued company at $3 gold and $5 copper, approximately. Very undervalued.
Yes. So talk to us about the infrastructure you have in place at the CK Gold project there in Wyoming, and also the benefits of operating there. You touched on it earlier, but Wyoming's perhaps one of the most mining-friendly jurisdictions in America, so a great place to be, right?
Well, if I might, I'm going to try quickly to share my screen. So infrastructure, right. So currently on project, there is no infrastructure. This is pasture land or farmland, essentially, which is great because it's the topography is wonderful, etc. But let's talk about infrastructure. So why is the mining cost so low at CK? And why is our CapEx so low? Why is it only costing $277 million to build a full 20,000 ton per day plant, a full extraction production facility where we'll be putting together a copper gold concentrate? We get a lot of questions by industry professionals on that very point. They don't believe our low numbers. They think, hang on, something must be wrong here. Well, you can see this white line running across the map. That's the I-80 corridor. That's Interstate 80. It runs from San Francisco through to Chicago, passing through Salt Lake City and Nevada en route. Along there is a Union Pacific rail line. So infrastructure, we've got all the heavy machinery on the planet within all the mining jurisdictions in Utah, Nevada, just a stone's throw away. Another key takeaway is to our east by 20 miles is the township of Cheyenne, Wyoming. And about an hour south of there is Denver International Airport along this I-25 highway. Well, with Cheyenne, Wyoming right there, and Wyoming being a resource state, all the professionals we need to develop, build, and ultimately produce from this gold mine live in the township 20 miles away. So we don't need man camps. People are going to be busing in and out of the project and sleeping in their own beds. Our energy, Black Hills Energy, they are transmitting our power to our project. They run 16 miles of new power line to the project, all amortized in to our 7.9 cent kilowatt hour energy price, so very low energy costs. Our water source right here to our northwest, our 2 water reservoirs, man-made reservoirs that supply the township with water. That's catchment from the snowy mountains. So we have access to water. All these things, key variables in building a mine, the infrastructure is there. So that's what we have for infrastructure.
That's as good as it gets. Could you obviously the CK Gold project, your flagship project, the one you're advancing to production, do you have any updates you could provide us with on your exploration efforts in Nevada and Idaho as well?
So Nevada is something, Jesse, one day you and I are going to spend an hour doing this just on our Nevada asset, okay? I mean, it's that special. We started this company around that project. It's called Keystone, and it sits about 10 miles across a valley from the Cortez complex, which is owned by Barrick, Nevada Gold Mines. It is about close to 60 million ounces of gold and growing, that complex. 10 mile away, we have a domal uplifted thrust of the same geology, the same lithology, stratigraphy, all these other big long words with PHY at the end that basically highly comparable to this gold-rich environment just 10 miles away. So I'd like to see this project explored. It's going to be explored. What I imagine will happen at some juncture is our shareholders at US Gold Corp will receive a share in a news co or a spin co that we'll go and attack Keystone with. And then the same goes for wanting to spend time, effort, and money in Idaho right now. But with Chalice, we're fully locked in, focused on the development of CK. Again, the value proposition at CK for our investors is tremendous. And so that's just our key focus right now.
Yeah, I like that you're laser focused there. You're not wasting time. You know where the value lies right now. And once you unlock that value, you'll then be able to turn your attention in the future to these other fantastic projects that you have, which is great. So let's end on this. What are some upcoming catalysts and news flow that shareholders can expect coming from US Gold Corp up ahead?
Okay, so aside from, this doesn't sound exciting, Jesse, but just optimization, ongoing optimization around plant, project, ultimately bringing down costs, trying to improve even recoveries. We're exploring using a new technology, actually, which would up the economics and up the recoveries of our project. Stand by for information pertaining to that. Another aspect of it that I haven't really touched on today, and I don't want to get too far into the weeds today, but I'm sure I brought it up in the past, Jesse. The ore body is surrounded by a particular type of granite that is highly sought after for construction, for concrete, for rail ballast, which is a big use for these styles of rock. And it turns out our waste rock sells for $20 a ton next door from Martin Marietta. So we have a couple of 100 million tons of that sitting around around our deposit. So we're exploring how to bring the value of that in for our shareholders as well. So there's a lot of news, a lot of excitement going on around our company. And I would be just telling our shareholders to keep an ear on keep an eye out and keep an eye on your emails. We'll be regular with news this year.
Fantastic. I'll put a link in the description below to the company website as well as social media profile for people who want to follow along, subscribe to your newsletter on the website. Luke, thank you so much for coming on and sharing your knowledge with the audience. It's been a blast.
Oh, same goes. Thank you, Jesse. And anytime, I really enjoy it.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.